SoFi looks strong on the surface, but the real story isn't the price. Momentum traders are seeing continuation, but there is one thing that's still missing. And if this shift continues, then we can see the setup that nobody saw coming. Now, when looking at SoFi technology, you can see we're in this very tight range after a bearish push to the downside, which leads us to the 3 or 4 most important variations, okay? For us to sell, we're really going to have to see the market either collapse completely or push up directly higher into the range, okay? So let's talk about the sell first and then the buy second. So the sell would look something like this as we look to rotate back up to the upside. We're in the confines of this range, which is 3 standard deviations above and below because of the tightness of the overall range itself, all right? So that means if we do pop up, we're going to have to break up substantially higher than this 1950 level for us to really see the bull case scenario. So what should happen once we push up is an actual return back to the downside, in which you only need a mini variation because the prevailing trend is bearish. Now again, equal distance above would be expected underneath. So once we do break through, we should be expecting the market to collapse roughly right around 18 3/4, okay? Now, if we just gap down in tomorrow's session, just be aware we will have to actually hold and pause because the market, again, is in this range. And what we will have to wait for if we're looking to sell is a bigger move that goes down and breaks out of the range, okay? If you get this range breakout, then we can now look to sell any potential pops to the upside. Now, those are going to be the 2 best ways in order to trade SoFi, at least to the downside. Now, other than those 2 variations, again, you have to be aware of the fact that those pauses are important because what should happen if we do gap down is actually a bullish return to the upside, okay? Again, this is a range and we're sticking to the fact that it's going to rotate. Now, in this rotation back to the upside, we should go somewhere roughly right around 19.5. And from there, again, you have to be patient because what should happen, like we mentioned earlier, is a range continuation in which we fall back down to the prior low. So if we go down first and you do miss the opportunity to ride this to the upside, don't get FOMO'd or caught in above this prior high because what you're going to sit and have to wait for is a breakout for you to be a buyer, okay? And that breakout looks very similar to the one we mentioned before, but just remember that ultimately there are several different variations that can constitute as a breakout and that this is just one of the many. Now, you obviously will learn this once you become a member of the Discord/Patreon, but for right now, I think this is a pretty good gold standard to have when trading ranges, all right? Now, if you do like this information, feel free to join me tomorrow where we have a special day for a live stream where you can see me trade the S&P 500 futures here on YouTube at 9:30, all right? Now, if you want to join the community, all the links are down below. And besides that, I'll see you all on the next candle.